have to tinker with it. All right, looks like we are live. Make sure we've got our visuals set up, and then we'll double check audio. Let's see, the audio seems a little light, but it's coming through. So let's confirm YouTube. How's the audio coming through? Is the volume level sufficient? If not, we'll need to make an adjustment. I think I'm getting it kind of light here. Light, but okay. So. All right, well, light is better than nothing. So we'll go ahead and get started. Hopefully it kind of comes throughout, and we'll go from there. So good morning, everybody. Welcome to another Engineering the Markets. My name is Jared. It is September 20th, 2022. Happy Tuesday to everybody. And let's take a look at some levels of interest that the market is presenting. We're gonna maybe talk about how to prepare for the week ahead of us. A lot of people have been kind of staying net bearish, which I believe is the right approach for this point in time. But we're seeing these large retracement rallies off of relative lows. It obviously brings a lot of confusion and suspicion as to which one could potentially hold as a more relevant bottom. And like most things, we're kind of looking at price activity to give us more indication of what the next move in the market is going to be, along with some risk assessment on different indices. So yesterday was a fairly significant rally. We saw Friday's lows be defended. We saw a break of the Friday highs into the closing session. And most of our gap down that we encountered on Thursday was countered. So like most gap downs, anytime you see them countered relatively quickly, or I'll just say any gap in the market, if the market can counter the gap relatively quickly, it makes the market appear to have, I would say, like broken the structure of what the previous move was trying to do. So in the case of a gap up open, if you have something like a gap fill, oftentimes you look for that to either continue the move after the fill has completed, or in the case of a counter move, you want to know if the gap is more exhaustive. This is where certain trends can end very abruptly, and usually in the form of some sort of pivoting structure, we often see those levels become more apparent over time. So what makes us maybe focus on this particular inflection point more this week than others? First things first, we have broken our trend line. So any rally at this point in time would need to recover what was a previously well-defined trend line. We had 2 tentative anchor points and then our confirmation that was broken on the 4th attempt to use it as a long support area. So bullish moves against the trend line for this point in time need to be assessed as a back test, because we have just our dominant downtrend, which has formed on the daily, along with this now support turn resistant trend line, which we'll need to see the reaction against. Some interesting readings, however, from yesterday come in the form of different, I would say, over-under type of indicators. The one that's super interesting from last week was the put to call ratio. Now, we did get this reading on an expiration Friday and a triple witching Friday. So for the time being, that could cause a bit of a false positive. But as we've seen throughout the year, and there's been a few references to this, a lot of our more relevant lows have required this to showcase itself as an overbought reading. And when it comes to overbought in this case, we're looking at more puts open in the market relative to calls. So therefore, it's more of a bearish sentiment overall, which leads to these counter rallies against the lows. And the idea can be done in both directions. You can get the market over optimistic, where there's more calls in the market open than puts, and the ratio is reading usually around 0.5, I would say, is your baseline support or just area of inflection. And then for put to call, anything over about 1.2 has been a significant reading for this particular indicator. Notice, however, that this has more so been true the latter half of this year. There have been some relevant readings whenever the market was starting to sell from its all-time highs, but this was more towards like a 1.1 type reading, and we got some inflections off of that as well. This is when things were a bit unstable coming off of a bull market, sort of a secular bull market all-time high. We're getting sound from your room. That might be my mouse clicking, Matthias. It is true that it is coming across the mic a little heavier than usual. I'm going to look into that maybe for tomorrow, but for now, that might just be part of the show. So, so that's one thing. Another thing that was interesting yesterday is some of the short-term price activity inside of corporate debt. So I talk about this as more of a short-term indication of whether the market is risk on or risk off. If HYG or something like J&K is rallying, I often view this as more of a risk on period until, of course, that trend or that signal changes. And similar to the trend line analysis, we are pretty much at that lower bound. This is where things can fall apart very quickly. But so far, we're holding. And I find that kind of interesting because we are coming into a significant period this week. So is the market kind of giving more of a false signal off of this, and what would it take to confirm that? You know, obviously you can't really change trends off of new lows, but you could potentially change trends off of a trend line. And that would be an interesting development for the risk on, risk off behavior of the market, which, as we know, tends to be more of a bullish bearish signal. So that was the second thing that I thought was kind of interesting yesterday. The rest of the market remains the same. Dollar is still elevated. We have that as our kind of classic, until this comes off, the market is going to struggle signal. We would like to see the dollar breaking trend for bulls, and then for bears, as long as the dollar remains in a bullish context, the market has a chance to continue to sell as this puts pressure on equities. We also have things like the 10-year, and this is the more classic reading of what does the bond market think about future inflation and how is it pricing it relative to current activity, in this case by the Federal Reserve. The 10-year did make a new high yesterday, so you have to acknowledge that we're getting the highest readings we've seen this year. Was this high super impactful? It's a bit mild at the moment, but we're coming from a pretty deep retracement. You could argue that we've gone low to high with little in the way of pullbacks. It's a very aggressive trend for interest rates at this point in time. And looking at that in the larger context, let me pull up a max month here. You know, it's obvious that this is a much larger structure that is still trying to continue its advance. If you recall, a long time ago, as we were first starting to look at this, the structure that we had was an inverse head and shoulder. Now, we were inside of a trading channel, but for something like this product, it's hard to go below zero. So unfortunately, this became, you know, I would say depressed enough to where the only way to go is up. And like most structures, these moves have measured targets. Now, we've probably hit the maximum target for this inverse head and shoulders. You know, if you were to measure high to low, you're looking at the target being met as of last May, and certainly by today, we're at those targets. What tends to happen though is as things trigger, you get more and more signals on larger time frames. So in the case of a reversal structure, if you're starting to break resistance, if you're breaking out of a channel, in the case of the 10-year interest rate, it can signal bigger things, albeit the main structure that has a measured move is the one that was identified early. And that was, of course, that inverse head and shoulder. So what we're looking at here is still a breakout. It's still continuation potential. And the last 2 months are very strong relative to the pullback that was encountered back in May. I'm open to the opinion that this could potentially top out somewhere around the 4% level. And that's where a lot of the probability estimates are for end of year and into 2023, where some of the Fed fund rates are going to be headed. If the 10-year can find its footing around those levels, then obviously that can be a fairly strong signal for the market to become more bullish towards things that are sensitive to rates, like technology, and potentially like some financial stocks, which are actually basing out this year. But in the short term, if we're looking back at the daily, there's this idea that we could see a double top. And before looking at that in that context, I would say the first thing you want to see is a loss of the current trend. There is really no indication that we have lost this most aggressive trend line, but we're at the level where you expect it to happen. And in the case of maybe a short to medium term rally in stocks like technology names, you'd want to see this kind of come back down and maybe even retest previous pivots, ones that were broken out of significantly, but we haven't really seen resolution, back testing. So that would be your double top thesis. And even then, I would say it's more of a short to medium term play, something where you're maybe scouting along in technology. Technology did have a strong rally yesterday. It was more of a risk on style day. You'd probably be somewhat net long on stocks like Apple, which did recover from that 150 inflection point. The middle of the middle is what I like to call it for a stock like Apple. It's a very central area for trade. So any bullish activity from 150 can lead us back to significant highs, but any bearish activity puts into the risk of this particular name breaking down further. You can see some of these inflections historically, some of the back testing that occurred before new lows, and just the behavioral characteristics once we cleared 150. It was a very bullish time frame for Apple and the stock market. So these are the names you may want to pay attention to if you're scouting something like a recovery or a return in the 10-year. And what you'd want to see is, wrong index, or wrong futures product. What you'd want to see is the 10-year notes. You'd want to see them start to bounce. Now, calling a bottom here doesn't really make sense because there's no indication. All we are at is recent relative lows. And it's been a slow and steady grind to this level. All that said, you'd want to be watching for it. This is where it should occur. And if it doesn't, then the trend is still in favor of more downside. So it's really just an if-then scenario of what occurs at this level. What's your expectation initially? Similar to 10-year, you'd probably expect to move back up to here first, some of your previous lows. And then from there, we can sort of ascertain lower lows or something more of range bound trading. So these are some of the risk factors of the market that are still prevalent. They keep the market looking downside. They keep the market sort of in a bearish connotation, but there are short-term signals that if they can align, that's where we're going to see more of the rally, more of the sort of counter move that becomes a bit more surprising to market participants. So last but not least, I would say keep an eye on your volatility readings. So far, we're still kind of elevated mid-range, but we did see a lack of follow-through last week. So we didn't really explode in volatility. Once again, it was an odd Friday, so it's hard to take out much from that. But this particular indication would be something to monitor. If we do get another spike in volatility, that should be occurring off of something like an FOMC reaction. And we'll talk about that more as a historical expectation, what has been occurring after FOMC the past couple of times. So a couple of questions. Double top on SPY. Haven't looked at it. Probably not. Why would ZM be going down as rates are increasing? So the dynamic of rates relative to whichever bond product you're looking at, this is the notes, is that as rates are increasing, the bond products are going down. So, they're always inverse of each other. And you can see this by loading up the, just do a compare with, we'll add the TNX, which is the 10-year interest rate. And you can see that this is an inverse chart. The relative highs in TNX are going to mark the relative lows in the notes. Lows here are going to be highs in the notes, et cetera, et cetera. So, the trend is exactly the same, just flipped. And, whether you are better identifying lows or highs, the market is at an inflection point. It's where decisions were made long ago. And until we see a signal that a new decision is going to be made here, we just assume that the trend is going to continue. And obviously the trend is very much bearish in the notes. So yeah, that's the dynamic of any of the bond products. All right, so for today and looking at FOMC, the market probability is still pricing in that the most likely scenario is that we get another 75-point rate hike. So we've talked about how after CPI last week and a half or so, we saw this probability change. We started off about 1 month ago with the idea that the rate hike could be a 50-point rate hike, especially if inflation readings were coming significantly off. We saw that probability change as CPI came in a little higher, albeit lower than the peak. And the market has priced in a probability that we're going to see 100 basis points. It's about a 20% probability. Our current is about 18, but our main probability is still 75. So if we're assuming that these probabilities are fairly correct, you can think about trade this week relative to these probabilities. What would be a more bearish move for the Fed would be for them to raise rates by 100 basis points. If that were to happen, it can be seen as long-term beneficial as it can curb inflation a bit faster. But for the stock market itself, obviously a bearish connotation, especially in the short term, because we could see more hawkish behavior like this in the next couple of meetings. So if that's true, then the market is saying, okay, there's about an 18% that we're likely going to see a sell-off based around the decision of a 100 basis point hike. If we encounter the higher probability, which is 75, we need to start questioning whether this has already been priced in. And what that means is that the market can discount the risk of what is known to be a continual high rate hike cycle, something that the market has been trying to basically cap overall, but we've seen fluctuations in inflationary readings, and therefore the back and forth trading and obviously the pivoting behavior of some of the Fed's decisions has obviously been some high impact trade. So how would you go about positioning around that? So when he says, so if he says, if anything above, anything besides those two probabilities would obviously be a big surprise. So how do you position around that? Well, we've noticed on the SPX that the expected move keeps breaking. So it makes sense for most positions this week to be assuming that we're going to get a higher volatility than what the market is pricing. So in the bullish case, you'd probably want to be looking at the market coming up to about 39.90. And I would say that's close enough to the 4,000 level to basically say, okay, if there is a bullish move, 4,000 seems probable, if not farther than that level. What might you do if you wanted to take advantage of that? You can obviously buy calls or just be long the S&P. You can also look at some verticals. You have a clear relative price target, and you have the idea that this week, the volatility ranges define some targets. Now, we've seen moves outside of these levels, but a vertical would take advantage of that. It would allow you to be a debit buyer, looking for something more directional in your favor. And because getting outside of expected move is something we've seen more often than not, you'd be playing towards a breach. Another consideration is you could put up a pretty wide butterfly. This is a relatively cheap kind of play, something where you're going out to like the SPX and you're looking at end of week. You could put up something like a 25 to 30 point butterfly centered around that 4,000 level. So you'd go out and do something like sell 2 of your 4,000s, and then you define how wide do you need to be relative to that range. So something like a 25 here, we would grab a 40.25 and a 39.75. That would define your range. This is a 25-point butterfly. And if you're lucky enough to where the market sort of centers around 4,000 end of week, this can be a very profitable trade. It also gives you a little bit of bullish exposure for very cheap. It's about $1.50 if the market is pricing this okay this morning. Obviously, the market needs to open, but this is about $1.50 to open. You'd probably want to maybe try and open at about $1.75. So for 25 points of long exposure centered around a key level, you're only paying about $1.75. Now, of course, if you're bearish, the market continues to reward after the rallies have occurred. We've seen these nasty sell-offs after a 1 to 2 day rally. In this case, it was about 4 days straight up. So if the market were to continue to rally today, it would be a good moment to also prepare for a downside move. And similar, you could open up a vertical. You could buy something like out of the money puts, because ideally, if we are going down, we're going to break last Friday's low. So out of the money would be probably somewhere in this range. You'd probably look for the market to kind of clear 380, and that would be a similar reaction to here, with all of our most recent sell swings. You also might want to look back at previous FOMC moves. A lot of the FOMC movement in the S&P has been rally first into next day sell-off. So it's sort of the counter price activity that most people expect, but on the day of the FOMC, we often have seen bullish behavior, and then the next day, the market gives it all back, and sometimes even more. So to me, there's kind of like 2 areas to focus on this week. You can be bullish until the meeting occurs, and that tends to be playing towards those upper levels. Once the meeting is over, the market likely will reduce volatility in this week's sort of series because that event will be over. But if we see a downside move, that volatility reduction will then re-spike as the market sells off. And therefore, you can get bearish at this level, but you could also wait and actually see what is the impact of the meeting. Because at the end of the day, you're probably going to get a good price relative to speculative puts. So those strategies, verticals for one, I would say butterflies are fine, but we are seeing moves outside of expected. So butterflies are more about targeting. In a breach scenario, you're just getting larger actual volatility. And then in this case, when to put them on. To me, it makes a lot of sense to allow this current rally to kind of fail and then use that moment, whether it be before or after the meeting, to start placing bearish positions. And, in that case, you're literally just playing towards the trend, maybe even setting up a trade if we ever get to this trend line once again. But at these lows, you're kind of playing with fire, because if this low holds, you might get bearish here and get no follow through. Usually the market has to rally for a few days off of a low to get that follow through. You just want to have it on for that event. So with all that said, right on time, that's my time for today. Trade safe. Stay tuned for tomorrow. We'll have plenty more to look at. And then stay tuned for pre-market prep. We'll talk more then.
Okay. Good morning. Let me cut this in. Good morning, I hope, all my friends in the room and everybody on YouTube. Give me a little hello just to make sure you can
Good
all hear
morning,
me.
everyone.
All right. Looks like we're good. Morning, Norm. How are you?
Good. How are you?
I am feeling perky today.
You
I
are
had some
Canadian.
allergies yesterday. Was feeling a little stuffy. I thought I was coming down with something, but feel good this morning. So,
Well, good. You are Canadian.
yeah, I realized just as I saw myself in the camera, I'm like, all right, well, that's a little on the nose, my shirt, but all right, here we go. Well, welcome everybody to a Tuesday. The markets are, well, as the title of today's YouTube live session says, we're sort of lying in wait for the FOMC.
We can go back
Jared
to
was just
sleep.
talking. Well, maybe. I hope not. There's almost always some trading out there, and but the markets do feel like we're sort of waiting for something big to happen. If you look at yesterday, in what happened, we really had a little bit of a move up, and the markets responded to our expected activity with some enthusiasm. But it was a little bit of a muted affair yesterday. Anyways, we were looking at a couple of stocks. Tesla was one of the ones that recommended. Great move off the open. Apple had a surprising, at least to me, it was surprising all day move. Moved up over $4 over the course of the day. And then there's a couple of other offerings that we were taking a look at. Netflix didn't have all that great of a day yesterday. And then BCAN was one of the ones that I know we had on our secondary list. I didn't take a look at it. It sort of dropped off the open. I notice it's on the list today, so we'll see what it's up to as we get into analyzing things today. Norm, from an overall market perspective, what do you see happening out there?
I mean, I agree. Sometimes days like this, we've got a big, obviously, big Fed rate decision tomorrow. I think almost everybody's pegging it at 75 basis point hike. That having been said, any deviation from that could cause some major moves. But there's a lot of debate whether they should be hiking at all, if they've hiked too fast, if they're crashing the economy. It takes a number of months for these rate increases and this policy change to take effect and take hold. And are we a lot of the CEOs that are talking about stuff, and you've got companies coming out warning on the state of business and such, and they've seen a huge slowdown that was very dramatic starting in July. So we'll see. Anyway, back to my point though, is we get days like this when we've got a big announcement, and obviously it's a 2-day meeting. Nothing comes out of it until tomorrow at 2 p.m. Eastern. Is the market going to do much? Are we going to find something with a catalyst? Yes, it's just a little more difficult. So we'll see. I anticipate probably some chop around. There'll be some things here or there, but swinging for the fences on days like today or tomorrow, before the announcement and press conference, can be both futile and dangerous. So be careful.
Well, let's avoid futility then. I would agree with that,
Yes.
absolutely. So, um, and in fact, I would suggest you always avoid swinging for the fences because that
Well,
usually
yeah.
leads to disaster. But all right,
One
so
conversation that we've had in the past is people ask about profit targets and stuff, and part of the reason I don't have a set profit targets because the market changes day to day. It's a lot easier when the market's moving and smooth, to do something than it and to hit some goal. And on a day like today, when things are probably going to be sitting around, chopping around today and tomorrow, um, it's not as easy. So you you take what you get.
that's a good point. One of the things we teach in our trading classes, webinars, we talk about the importance of understanding what you're trying to achieve. And when you start out, targets I do think are important because it helps determine focus. But almost universally, as traders become more experienced, a couple things happen. Their trading becomes a little more intuitive, but they also tend to abandon the specific target goal. Norm, you said it. You don't have them. Thor and I are sort of in a similar camp where we sort of have a target, but if we get there, that makes us happy. If we don't worry about it. Andrew really doesn't have a target on the day. He just takes what the market gives him.
Yeah, he's a perfect example. I mean, he can come and in 15, 20 minutes make 20 grand, and it seemed like it, there were nothing pulled back, nothing went against him. It's just woohoo, and that's it. And it was just like tying a knot, tying a shoelace. Whereas he can also have a day where he comes in and, let's say it's a positive day, he does okay, he makes a couple $1,000s, works for 90 minutes trying to do it, struggles up, down, finally walks away. That's my point. That's why I don't. Every day is different, and when you get days like today, they can be a little rough.
Yeah. So not having too fixed of a goal in terms of profit, especially on days like this, as Norm was saying at the beginning anyways, is important because it may be difficult to achieve. So you may just want to take it a little easier and see what the market is willing to give. So with that, as we look at the markets, we are trending down a little bit, and you can see, I've got this list from yesterday up here. We'll get rid of those and take a look at some fresh stuff. But even one of the things I was looking at this morning, I thought I would show you guys is I'm looking at the ETFs, and man, there's a lot of red on that screen, isn't there? So when I take a look at that, we're red across the board with oil and gas up like 0.2%. Airlines marginally up, and the cannabis ETF. But I mean, this certainly to me tells a tale. That things are down, but even look at the percentages, right? Nothing's down more than 1%, really, other than biotech, which is barely there. So, pretty, like we said, muted. We're sort of sitting in wait for what's going to happen. So with that, let's take a look at what we do have on the gappers. Once again, we've got this BCAN that's sitting here. It is trending up because we do have a few things on the upside.
Whenever I see this ticker, I always think it's somebody making fake weed. Plant-based weed. But this is a software company, CRM, specifically niche for the cannabis industry and in Canada, and it just
Yeah, and as I showed you yesterday, it basically just sort of moved down very slowly and then flattened out after the open. So I don't have any particular interest in trading it myself, but I'll put it down here in case some of our members want to take a peek. All right, so let's look at the next one here. ZR or ZR, depending on whether you're Canadian or not. This has been on the list, on and off the list a few times. Float 200 million, so it's not a low float, but it's not trading great pre-market.
The only thing I'm seeing is it looks like they had JP Morgan initiate coverage on them with an overweight rating and a $30 price target. That's all I see.
Okay, well, usually new analyst coverage doesn't lead to a lot of great trading, so it may not be that exciting. In absence of other things, again, I'll throw it at the bottom of the list. Las Vegas Sands, LVS, looks terrible pre-market, but they don't usually pop up unless something's going on. The volume is pretty low, though. Only 100,000 shares, 105,000, so they're barely over our limit to even make the list. But being that they're not accompanied by some of the other like industry stocks, is there specific news, or is this just an aberration?
I don't see anything. That's not that I'm not missing something, but I don't see anything as of this morning.
Sorry, and I just got distracted. Yeah, so I'm not going to put it on my list. I got distracted because Patrick in our chat room. Sorry?
I think Macau's opening is part of it. But yes, Patrick, we'll get into that in a minute. Or I guess Peter wanted to get into it now.
We'll tell you
guys. It just proves you can't sustain a plant-based diet.
Yeah. All right, for our friends on YouTube, we'll let you explain that in a minute, Norm. Let's get through the gappers first, and we can come back to that. All right, and the CLH. So we've got a cruise line here, Norwegian Cruise Lines, which is gapping up 340,000 shares, 2.8%. Now, I usually like it when the cruise lines start to get on list, but again, pre-market not looking great. Was there some news on this one?
They got an upgrade out of Truist Financial from hold to buy. They've apparently pointing to a decrease in cancellations.
So that's a good thing to pump them up? All right.
Yes.
People are canceling less than they normally do. Okay. Well, again, analyst reviews don't excite me that much as news, so I'm not sure whether this is actually going to be worth watching, but maybe I'll set some levels and we'll put it on a secondary. Okay, let's quickly go through the gap down because I don't see anything gapping down significantly. I think this is ArcelorMittal, yeah, it indeed, which is a foreign miner or.
I believe that's. I don't know what language it is. What do they speak in Luxembourg?
They're
Luxembourgian.
I thought it was
French?
a French country, actually.
I would think they'd speak French. Yeah. I think that's French for garbage.
Yeah, I mean, this is part of an industry that doesn't trade well, and as a stock, it never does. So we'll just skip right over that.
German and French. Okay.
Okay, there you go.
German and English. They speak everything.
They speak everything. Tiny country, many languages. mRNA. Now, I think, Norm, you had mentioned mRNA yesterday, or somebody had, that there was rumors of they had a drug distribution deal with China, but I'm not sure if that is.
That was a few days old. I think, frankly, I don't, and you being up there in the frozen tundra, I don't know how much you would pick up on this, but President on Sunday was on 60 Minutes down here. And he was being interviewed and talking about COVID and said the pandemic is over. So that raises some questions and have I'm getting just facts about Luxembourg. It's awesome. That they have the highest divorce rate in the whole world. I don't even want to go there. It's a small country. I guess if you cheat or whatever, it's easy to find the other person, or what's going on or hear about it. Anyway, so Biden on Sunday in 60 Minutes said the pandemic's over. The White House kind of trying to walk that back because a lot of the things going on, for instance, student loan debt forgiveness, which constitutionally should be done something that would be done by Congress and not the administrative branch. Is done under the guise of emergency relief for COVID. So if there's no more pandemic, we probably won't have a lot of money free flowing for vaccines. And so that's part of what's going on there. Anyway.
All right. Well, and you're right. No, I did not catch all of that. I mean, how could I possibly, while there was an 8-hour procession to honor the Queen Elizabeth as she was laid to rest. I mean, I couldn't find anything else on the news other than that. It blew my mind that there was that much coverage. But anyways,
it is amazing. Even down here, man. I get it up there as being a Commonwealth or whatever. You're Commonwealth, right?
Yep.
Yeah, exactly. So you have a connection. We broke our connection, 1776. So there was still coverage wall to wall everywhere.
It was.
Speaking of Andrew being in England, yes, he is. It's actually his birthday today too.
Oh, that's right. I forgot. Yes, it is his birthday today. Well, if you're listening out there, Andrew, happy birthday. But hopefully he's enjoying it in jolly old England. All right, moving on our list here. We have a couple to take a look at. Becky, as Brian likes to call it, BEKE. Which is KE Holdings. Doesn't look that great pre-market. I mean, the gap and the volume are relatively low. I don't know. Unless you tell me there's some fantastic news. Doesn't look great. Even the daily's not looking that great. It's sort of chopping in a range here. Moving on to PayPal.
Too terribly interesting.
Yeah. All right. PayPal also doesn't look great on the daily. Pre-market volume is pretty low and the action is low. I think it's just chance that this happens to make it to our list. That being said, PayPal and Square are two that can often trade well. If you like that industry and you like the way these trade, there is opportunity. I know Megan in the room will often watch one or both of these. So it might be worth putting on your list to set some levels. Maybe I'll put it down here on a secondary.
PayPal got a downgrade this morning.
Yeah, so if it's just a downgrade, again, not the most exciting news, so not looking that great. Fro, I think this was on our list yesterday, and I ignored it yesterday, like I think I'm about to again today. So,
yep.
Yeah, it doesn't look great. I mean,
Petroleum
it had some
shipper.
move up yesterday. Let's see.
Flagged in
It actually
Bermuda.
had some movement here yesterday. You can see it sort of just went up steadily all day. So potential trade opportunity on it, frankly, but it wouldn't have been that exciting of a trade, but could have been profitable if you got in and just held on. So we'll see what happens to it. One that just popped on the list here, MAXN. I don't even know what this is. It literally just popped on as I was watching it. It actually has decent pre-market steady volume. Not huge, though. 125,000 shares. It's only down 1.7%. I don't know. I've never heard of it. What is this? Maxion.
Solar.
Solar? Oh, it's a solar company.
Singapore company. I'm not seeing any real news on it.
All right, down to the secondary you go. All right, moving on to Rio. Rio's got some good pre-market volume, 100, but still down in the like 120,000 shares. Again, Rio Tinto, MT, sort of similar industry. Don't like to watch them generally because they don't trade well. These are all dual listed, which usually provides other challenges because they don't move independent. They move in concert with what may be happening in other foreign markets. So just makes it a little more challenging to read the tea leaves, if you will, or take technical signals from it. So I'm going to skip over it. Veru, Veru. I know I've seen them before. I can't for life remember what they do. They've got a decent float, 64 million.
Manufacturing. There was some news yesterday, FDA news on this. I don't know if this is any good or not. I don't like $11 tickers too much, so.
Yeah. Oops. So here now I should look at what's actually happening pre-market. Not much happening pre-market really. I got a wealth of like crappy stuff on the secondary. Oops, but not a lot of good stuff on the main list. So we'll have to get smarter on this later. And I think that things are jumping around here in the gappers as they just move up and down. But that's about it. Okay.
I've got a couple for you, Peter.
Yeah, that'd be great. I was about to ask.
Well, first of all, beyond the meat, we can talk about that.
Please, let's do.
I don't know if they'll move on this catalyst, but I guess the COO bit off somebody's nose or something. Mike Tyson, some dude.
Yeah,
Except missed the ear. I don't know that he bit it off. I haven't even read the story, frankly.
Oh, no? I did. It was fascinating. He was in a parking garage after a college football game. A guy was trying to cut in front. Have you ever been trying to get out of a lot after a game? Everybody's inching forward. The guy bumped his Subaru into the tire of his Bronco, and he got out, smashed the guy's back window, and basically gave him a bear hug, started punching him in the gut, and bit his nose. Now, whether he bit it by accident or on purpose, the story didn't say, but that's basically the story. He's some bad behavior after a college ball game.
So I want Megan's input. Is he still a vegan? What an ass. God.
Oh, Megan.
All right.
We warned you to stop making fun of us. That was her response. I love it.
Anyway, that was just for fun. It doesn't seem to be really that interested trading wise. I'm going to mention another one that Megan brings up every once in a while. This one is almost as interesting as plant-based meat to me usually, and that is Ford.
Okay. What's going on with Ford?
This one is not on our gappers list, despite having the volume and the gap, because its ATR is too small, which is one of the two reasons I don't like it. It's low priced, and it is ATR. It just doesn't move that much. But they're talking about they gave a warning for the quarter that they're going to come up short because of some issues that they're having.
Oh, okay. I'm going to write that one down. So anytime there's a profit warning, that is usually a good catalyst anyway. So yeah, a good one put on the list. But you're right, Norm. It can be tough to trade because it doesn't move much. You are playing in pennies here. So as long as you okay with that trade, there is an opportunity there. All right, good. What else you got? Anything?
That's all I got right now.
There are an unlimited number of pictures of people biting other people's noses happening in our chat room right now. Okay. Apple and AMD, which I always keep on my list, are not doing anything special this morning. I mean, they're looking okay, but not great. Tesla, like I mentioned already, sitting up over 300 now, so that's good. It moved up handily and is now holding above. So maybe we'll see some opportunity. Jared is giving some support for NCLH.
Oh, nothing.
Google.
I just saw something really concerning on BCAN's website.
Oh.
I'm not going to even bring it up here.
Okay. I'm surprised you're even bothering to look at their website.
Well, it's surprised that Jared pointed it out. They have they're diversifying their products, CRM, and I'm sorry, but it's their business. Okay. Some kind of intravaginal CBD delivering device. I don't know, man. I concerning anyway.
Wow, that's okay. Well, leaving that one.
Didn't
and
think that would come up.
Exactly. Google. Someone's mentioning Google. Doesn't look great pre-market, but look, it can have some moves. Now that the price is down in a tradable range, it can be interesting. I don't keep a close eye on it because, frankly, I still haven't found great trending moves on it. But if you like it, by all means, take a look at it. Moving to YouTube. I see someone mentioning Neo, so that's the last one I'll take a look at before we move on here. Neo, yeah, nothing special today. 400,000 shares, which is a little low for Neo at this time of day. As you can see by the daily, it is absolutely chopping within a broader range that's expanded over the last couple of weeks, but still not moving greatly. That being said, you can get a move on the open on this, or even just after the open. It can make some moves. So, whether it will today or not, you never know. So if you like it, that's one that you can always take a look at. And Myrna, yeah, mRNA, we did take a quick look at, and we'll put some levels on. All right, so that's what we had on the Gappers list. Let's take a look at our calendar because we always have a lot of stuff. No matter what's happening in the market, we always have a lot of stuff going on here at Bearable Traders. So let me just cut Norm over there, and you can run through the weekly agenda.
Yep. If you're ever curious what we got going on, just go to bearabletraders.com/webinars or click the webinars button in the nav bar at the top of the screen. All right, every Monday night, onboarding technology with Carlos, 8 p.m. Eastern. Mike's covering that as Carlos is out in the Dominican Republic getting hammered by hurricanes. So thank you, Mike. Good luck, Carlos. Tuesday nights for strategy. Tonight, we've got Eamon, 5 p.m. Eastern. 5 p.m. Eastern. Be sure to note that special time. Managing an open position. And then next week is Andrew, 8 p.m., talking about his trading room. He's going to talk about his technology setup. He's going to be talking about how he finds tickers to trade and what he looks for in a setup. So kind of an all-around introduction to Andrew's trading. Wednesdays, we focus on psychology. Tomorrow night, 8 p.m. Eastern, is Mike talking about analyzing your psychology journal. And then next week, Randy Howell, 8 p.m. Eastern, emotional self-mastery of the trading mind under stress. So he's going to be talking about dealing with stress while trading. Thursdays is for mentorship. We've got 11 a.m. with John, 4 p.m. with Ed, 8 p.m. with Thor. Then don't forget about stocktradingsimulator.com, our free web-based replay simulator, that with trading terminal, since the cat's out of the bag on that. tradingterminal.com. You can go and check out our scanners as well. So, and you can actually get to the simulator through Trading Terminal too. So go check that out. We are constantly adding features. Artie is working his tail off to get that to peak performance. And we did pass, what was it, 20,000 monthly active users yesterday. So congrats to the team, the development team, everybody on. Try out the room, and you want to give it a shot for a week without any obligation. You can use the promo code PreMarket24 for the intro membership. It'll get you a discount off the 7 calendar day membership into the room. Does not recur. It's a one-time payment. And if you'd like to become an annual member or an elite member, you can use the promo code READ50 to get half off the elite annual membership and a free one-on-one coaching session with Dr. Kenneth Reed.
So many bonus activities. All right, but seriously, if you join the chat room, there's always stuff going on. We always have a lot of fun into the close with our banter and review of the markets. But all day we have moderators that are on, sharing their trades, trading live with you, and helping you understand the market, answering questions both not only on strategy but also on psychology, which we put a big emphasis on. All right, so with that, let's set some levels. I'm going to take a look at both the daily and then the short-term chart. I'm going to flip over to a 5. Actually, let me put a 60. Oh, that's ugly. Never mind. Put a 5-minute chart up here. And we'll see if we can find levels on these things we've identified. All right, here we go. NCLH. NCLH had moving to the top of this range here. So like I mentioned yesterday, we have the highs and lows of the previous 2 days, which are already on my chart and bracketed. I'm going to move back here on the chart because if we're going to be moving up, which we are gapping up this morning, there is, because of course they have fewer cancellations than before, which still amuses me. But there's a level here, 16 and a quarter roughly. That might be a level to keep an eye on, as well as I'm going to put one right over here, roughly at the high of this area where we saw some resistance before at $17. So that'll be good to watch on NCLH. mRNA, which also I have on sort of my potential primary list. It's gapping down here this morning. I'm going to put a level certainly down here because this is where we found some support, 116.42. Actually, there may be some slight level of support up here a little higher, 121-ish, 120.74. Let me just see what I've got here. 120.20, and what's the low of this candle? 119. So yeah, 120.50 is actually where I want this level to be, because that'll give me some good notice if we get down there that there might be some support at that level if we get there. BYND, we mentioned a little bit out of jest. I don't know whether it's going to move or not. I didn't see much post-market. It really didn't react to that. The news was just amusing to us because, as you probably know, it's just a constant source of amusement talking about the fake meat company. So, frankly, I don't see any valuable levels to put on this. However, I'm just going to go back in time here because is this an all-time low? Yes. Yes, it is. Okay, so if we are at all-time lows, like I mentioned, that can be interesting because, that means I have no levels, but it also means that it can certainly go lower because we've got nothing to hold it back, right? There's no previous support or resistance to get in the way of the free movement of the stock. So might be worth watching today as we head through the lows that had previously set back in May, June, and head lower. So who knows? Ford, as was mentioned, backed off some of their estimates, which is always bad when they sort of have to retract their guidance. So there is a gap area right in here I can see back in July that we may want to keep an eye on. So low of that candle, I'm going to put a level right there at around $14. And then I'm going to mark the bottom of the gap here, $13.19. So we'll see if Ford continues to drop. There may be opportunity on this. Again, remember, Ford, you've got to have tight stops and very clear objectives of what you're trying to achieve. Make sure that you can achieve your 2-to-1 or whatever profit ratio you're looking for, because this is not going to move, a dollar, or it's unlikely to move, a dollar or two off on you. It's likely to move 20 to 30 cents. So we'll see what happens. PayPal, as I mentioned, PayPal and Square are two that you can potentially trade and often can give opportunity. While it doesn't look good pre-market, we're sitting right in this pretty tight range that PayPal's been trading in for a little while. The highs and lows of the previous 2 days already bracketed for me. So while we're gapping down on PayPal, this could revert and head back to the high end of the range. I'll put something here at the bottom of this range at 89.80. And then if it really goes crazy, we get up here around 98.90, 99, I'll want to keep an eye on it. Otherwise, we're probably just going to have to see what it does. Not much. This low of yesterday is probably the better. Look at how it bounced off that low twice. We're sitting right above it right now in the price. So we'll see if we get there. Are we right above or right below it? I think we're right below it. So we'll see what happens with that level. BCAN, as we mentioned, I look at the chart. I'm not sure where to even put levels on this thing. It just sort of trended down yesterday. Really, this area of consolidation just below $5 is a place to watch. But if it starts trending down, you're probably not going to get much out of it. It is not shortable, as you can see here. There's no shortable symbol, unlike something like Ford, where you see the S, which tells me that the symbol is shortable. Let me move it up here. So if I click on that, I get told, right, it's shortable for up to 10 million shares, and it's a marginable short, and here's the margin rate. So if you don't have a symbol there, that means it's not shortable, and sometimes you get other symbols if it's been halted, or if it's on short sale restriction, SSR, that'll appear right in that spot. Okay, but anyways, so BCAN is not shortable, and if it's weak today, then that's not going to give us much of an opportunity. Being said, it is gapping up by 34%. Who knows where it's going to go. LAZR is up above this range that it's set. Other than putting something up here where it showed resistance before going higher at $11, I'm not going to watch this, to be honest. MAXN, also something I'm not likely to watch. It is breaking out the top end of this range. Yeah, I don't find it that exciting. The high of yesterday is certainly a place to watch. It looks like it's almost exactly $20. $27.99 was yesterday's high. So if it gets back up there, then you can watch it. Otherwise, look for the lows of the previous 2 days, and that's about all we need to do here. VERU, again on my secondary list, at the bottom of its range. Again, yesterday's low is a thing to watch. I do have a 100 moving average. Sorry, this is the 50 moving average. Sorry, coming in here. No, I lied. The 200 moving average. Oh my goodness, I'm losing my mind. The 200 moving average on the daily coming in at $10.08, which if it breaks yesterday's low, maybe a secondary place to watch. But that's all I've got for Vero. LVS coming at the top of the range that it had set. This is a little more interesting to me just because it had a strong consolidation range over the last several months, and it's moving up the top of it. That being said, there is a high here of a couple of days ago at $40.33, which almost exactly matches the high of today. A high today, or pre-market, $40.35. So that seems to me to be of significance. So we'll see if it goes and retests that or breaks through that level. Then LVS might be interesting. So that's what we've got there. The last I should mention, as I always do, AMD that I like to look at. Really, it's gotten into a very tight consolidation range. So I'd love to see this break out of it to the top or bottom. Hopefully the top. But the semiconductors have been not in favor, as you can see. And even if I look at, for instance, NVIDIA has a similar chart where it's really come down off the highs, the recent highs, and then is trending sort of lower here in a tight range. So we'll see what happens. And last but not least, I'll look at my friend Tesla. Tesla, like I mentioned, up over 300. I like the move yesterday. And as it's sitting towards the top end of this range, we absolutely got to look at yesterday's high, which is just below 310. and 310 being a significant sort of hold dollar level. Those hold dollar levels do have significance on Tesla, especially like the $10 levels, right? We might want to keep an eye on it if it shows some strength. That's going to largely depend on the market, which right now is still trending down a little over 0.5%. So I think the things like Tesla, Apple, Microsoft, AMD are all going to be moving based on what the overall market does, both the SPY and the Qs. So keep an eye on those, and you might get an indication of where these other ones want to go. So that's all I've got for this morning. Let me just do a quick check of the room and of YouTube if you guys have anything else you really, really want to look at. I see somebody mentioning Boeing. I can take a look at Boeing, see if it's doing anything fun. No great pre-market action. On the daily, it came, sort of was moving down and then sort of bounced back up into this range yesterday. So I don't see anything particularly exciting there on Boeing. Somebody's mentioning CHNG is at all-time highs. Oops, I can't type it. CHNG, wow, that pre-market looks horrible. So this to me is a signal of algorithmic trading. We haven't talked about that a lot recently, but it is up 7%, and I'll take your word for it, this is an all-time high. It's certainly above the recent highs. But even in the pre-market, you can see that there's algos trading this. How? Because you've got movement here in these candles within a penny. I mean, look at this candle here that I'm highlighting right now, right? The high, the low, the open, the close are all $27.31. So, and yet you had 4,600 shares traded, right? So all within a penny. Here you have the same thing. It's within 1 penny range, but you had 45,000 shares traded, right? The only thing you can trade with that level of precision are the algos, which means they're active in here. Now, that being said, algorithmic trading is, sort of just a given within the market. Almost 80% of all volume is traded directly by computers without human interaction. So, that's not something to be afraid of. However, if it's only the computers trading, which tends to result in these tiny little 1 penny candles, that is not conducive to good day trading, right? We can't normally take advantage of that because you need other active traders in there, human traders, to create good markets and signals that we can leverage. If it's left only to the computers, I've personally found that it leads to terrible trading, and I usually just avoid them. It's, again, you can usually visually see it right on the charts. When they look like this, I just know to move on. So, all right, so that being said, CHNG being at all-time highs, may get some movement. We'll see what happens. Last but not least, I see someone mentioning on YouTube Amazon. Amazon's got a little volume this morning, down just about 0.5%. Yesterday's low is a place, well, the last 2 days' low may be a place to keep an eye on. It sort of ended at the high of the day yesterday. So good movement into the close on Amazon, but it's losing some of it back here today. Yeah, again, if you keep it, I actually keep it on one of my secondary charts. So I keep an eye on it in case it moves, but, often I'm not finding a trade on it. So, I just wait and see. I like to call myself the alligator or the crocodile in the watering hole, right? I got to wait for the animals to come close enough as they drink and have the right condition, then I can take advantage. Same thing in the markets. I just got to wait for the stocks to come to me. I don't go chasing things. I wait for them to come to me, demonstrate the setups. I've got to watch lots of things so that I can position myself appropriately, but I don't go chasing. So, well, today is definitely going to be a day for sitting and waiting. Looking at this list, I'm probably going to keep an eye on NCLH and mRNA. Probably Ford as well. I like those three so far, right, to keep a quick eye on, and we'll see, if any of those show some price action. Even Ford, remember I talked about the algos, right? You can see that happening in Ford here. So, I'll keep an eye on it, but I'm not excited. We'll need to see if more retail volume comes into it, because right now it's not trading pretty. So, Harry K is saying that crocodile metaphor is like the Beyond Meat COO. Well, let's hope not, because that was not a very effective strategy for him. So, anyways, I will keep an eye on a few things here, and we'll see what happens. and hopefully I will get some trade opportunity. And if I don't, right, then this may be a no trade day. They don't happen very often for me because I find that there's almost always a trade opportunity. If not at the open, then later on in the morning as things set up and the sort of the trading day matures, I find that I get more opportunities. And frankly, my best trading often happens midday because you can get big long trending moves if the day sets up for it. So today, as we look at the markets, right, I don't know what they're going to bring, but there's probably opportunity. So with that, I hope you have a good and safe trading day. I'll mention again today something that I mentioned yesterday. So if you're wondering about our list and then what happens in our room, this list is really intended to help identify things that may create tradable trends and identify levels at which those trends may either initiate or find support or resistance that may cause them to falter. So that's what we're doing here, and these lists will help you with those trend-based trading or pattern-based trading. There's a whole other style of trading, which would be momentum-based trading, and some of our best traders, especially at the open, love that momentum, which means that they are coming up with a slightly different list because they are usually waiting until right before the open and looking for what's moving in the moment that they can take advantage of when the opening bell rings and things take off. Brian and Andrew are two great examples of traders that really can thrive on that momentum and trade well, and they may not use the same list whatsoever. One of the great things about our room is that we've got traders with all sorts of different approaches to the market and end up with very, very different lists. So I mentioned that as one of the last things we normally do here is we go into looking at those lists. So know that their lists are going to be different and may have things that are not on the scanner that I'm providing to you because specifically they are looking for different things. They're looking for maybe a combination of momentum and trend plays. They may be looking at their strategies specifically and seeing how they can take advantage of them. So as I pull up our chat room here, you can see that Jared's already got his list and he's watching Oxy, Norwegian Cruise Lines, and Boeing. On a secondary list, he likes LAZR, or AMD, and PayPal. Thor is going to be watching Meta, Microsoft, SPY, and the Qs. And Susan is going to be watching Apple, Ford, Netflix, and the SPY. So as you can see, a little bit of difference in there, but we see some of the stuff that we've looked at, right? They all see things that they like or that they're maybe anticipating moves. So as I said, my list would be slightly different as well. Megan just jumped in with her list. She's watching AMD and Ford. She always keeps it tight and watches just a few things and waits for her levels to set up and then takes the moves if and when they set up off of them. Switching quickly to IPOs, I did check earlier once again today. No anticipated IPOs. We do have some stuff that's coming out later this week, but tomorrow should be the first day for a couple of IPOs that I'm anticipating. Well, that being said, one just changed date on me here. I do have one that jumped on my list. It looks like it's a SPAC on GLSTU, so I will alert our room if and when that actually does open today. I know it's a SPAC because it's 5 letters ending in a U. Those are both usually giveaways. It's also on the NASDAQ, what they call the global market. NASDAQ Capital or NASDAQ Global tend to be the markets that these things trade off of. So I don't expect much out of it, but you never know. That's why we keep an eye on them because you just don't know. All right, last but not least, my good buddy Brian is going to be looking at LVS MT. Well, I'm surprised. Look at that. He's putting MT on the list. TQQQ and SQQQ. So he's hedging his bet as to whether the markets go up or down. He's going to be watching these leveraged products in both directions. TQQ is basically a leveraged ETF product for the long side, and SQQQ is for the short side. Basically, so you can trade both of these long. It just depends on which direction you think the market's going to go. So with that, I think we're done here for the morning. Brian, if you're out there, good morning to you. I know that my friends on YouTube can't hear you, but the room can if you jump in there. And we hope that everybody on YouTube has a great trading day. Good luck out there. Trade smart. And we will see you back here for the pre-market show tomorrow. Or hopefully in our chat room. Take advantage of the discounted rate to join using PreMarket 24 to jump in, see what it's like to trade with a community and get that support on the technical side, on the emotional side, and even just trade identification. We never tell you what to trade. Our philosophy is about teaching you the skills needed to trade for yourself. That being said, it is always valuable to have other people and other eyes on the market that can help identify stocks that they think might have potential, against which you can do your own analysis and see if that's something that you want to jump into. So with that, have a great day on YouTube, and in the room, trade safe, everybody. Take care. We'll talk to everybody tomorrow.